All right, it's time for this morning's bull run, and joining us today, we have one of our good friends of the program, Ptor Benedowski from Xapo Bank. Piotr, holler if you hear me. It's always great to have you back on the show. We got Piotr today. There he is. Hey, you doing, Piotr? Great to see you.
Great to see you too, Hank. I hear you loud and clear today.
Oh, I'd love to hear it. We got a lot to talk about today, my friend. Really quick, though, everything good on your end of things right now? It's been a minute.
Absolutely, and it's getting better by the day. So super excited. Those news that we can comment on today. It's amazing news.
A lot to be excited about today. New all-time highs and all the news we're about to chat about right now. So hang 10, Piotr. I'm going to bring you back in a second, then we're going to chat about this first story. Because Walmart, the retailer that sells everything from tires to toddler toys to piñatas, is now adding Bitcoin to the list. According to CNBC, the world's largest retailer is integrating Bitcoin trading into its fintech app, OnePay. That's right, America's biggest store is about to become America's biggest crypto on-ramp. The rollout starts later this year, and users will be able to buy Bitcoin right inside the OnePay app and then convert it instantly to cash to spend at Walmart, because nothing says mass adoption like paying for socks with Satoshis. Now, OnePay isn't some random third-party wallet either. It's Walmart's own fintech baby, born all the way back in 2021. Their goal here: build the US version of WeChat, a super app that combines banking, payments, shopping, and now crypto. Or in other words, it's about to be easier to buy Bitcoin at Walmart than it is to return something without a receipt. Walmart has been quietly adding financial products for years now. We're talking high yield savings, credit and debit cards, buy now, pay later loans, even wireless plans. And now they're sliding Bitcoin into the mix like it's aisle 7. All right, we're bringing Piotr back. Piotr, when you hear Walmart, the world's biggest retailer, adding Bitcoin trading, do you think mass adoption or mass confusion at the customer service counter? What do you got?
Yeah, I definitely embrace the news positively, and I'm super happy to hear that, because that's exactly bringing Bitcoin to the masses, is bringing Bitcoin to where the customer is, bringing Bitcoin to the retail. Because right now, Walmart app is becoming like a Bitcoin's new on-ramp, right? 150 million or so Americans that are using Walmart every week. Now they are few taps away from holding Bitcoin. So that's like a pushes for the real distribution, and this is helping the adoption of overall Bitcoin. Because now the retail can just start using it right away, even if they weren't thinking about this before. And this obviously widens the whole and grows the whole ecosystem as well. So for me, it's amazing that they added it, because this allows also for like all those use cases like spending, sending, saving BTC. Now this will become available for their customers, and they are meeting their customers where they are. So already in the retail app that they have. So I think if they nail the UX and the compliance and make it really easy to use Bitcoin there, they will quietly onboard more users into Bitcoin than any other exchange ever has. So I think that's sort of like a direction where the next wave of the adoption could be. So instead of thinking about creating yet another crypto app, we can just look at what the apps are already popular there and just plug Bitcoin to make those apps better, plug Bitcoin to those apps. So I think the next killer app, and this we'll see, it will be somehow plugging the Bitcoin into ChatGPT and this ecosystem. So they have hundreds of millions of users already, and they are growing pretty fast. So that's where next killer use case for a Bitcoin will be.
Yeah, it certainly seems like a huge on-ramp to more Bitcoin adoption as we enter the future. But like you said, it's one of those things we really need to see them nail the UX of it all. And that's something I think we kind of still are figuring out as a whole. And once we kind of get the user interface and experience to be a little bit easier and simplified for all the no-coiners out there, we're going to see a lot of new people rush into the Bitcoin space. And Piotr, Xapo Bank is built on the idea of kind of bridging Bitcoin and traditional banking. So how do you view a company like Walmart trying to play in that same sandbox?
So yeah, definitely Walmart is Walmart app at Xapo Bank, we've been focusing on the let's say high end of the market. So our members are predominantly high net worth individuals or Bitcoiners who have been in the ecosystem for a long time. They accumulated lots of Bitcoin already. They keep buying more Bitcoin. And so we are sort of catering to that part of the market. But Walmart obviously bringing fresh people into the ecosystem and extending the reach and bringing more people in is obviously helpful to see that as well. I think on the retail side, the Walmart app itself will help you actually shopping with Walmart, but also you'll be able to probably spend that Bitcoin that you have there. Whereas with Xapo Bank, I mean, we are this one app that sort of bridges the USD with Bitcoin. And with Xapo Bank, you can actually do everything that you could be doing on USD side in traditional banking, but on the Bitcoin side. So not only we are offering savings accounts, spending with debit cards, borrowing against your Bitcoin, but also investing in stocks and ETFs. We are offering all of these services so that you have one place to both keep US dollars and Bitcoin next to each other, because USD represents the money of the past, whereas the Bitcoin represents the money of the future. And want that bridge to have. We want to have this one place that allows you to have both and benefit from both, from USD liquidity at the same time as Bitcoin, upside potential.
Yeah. And, it is exciting about the Walmart, especially because, Xapo caters to people that have oftentimes been in the space for some time. And now we're kind of reaching that inflection point in Bitcoin's journey where we need to start reaching out to this whole new audience of John Q. public that has dismissed it for a long time. And what a better way than to have them use it while going to Walmart, the biggest retailer in America, if not the world. So it seems like a really big step in the right direction. And I'm excited to see how that's going to play out. And Piotr, from your seat at the table, if you had to predict who's next in line to do something like this, Amazon, Target, Costco, who would it be and what would real mass adoption look like from a consumer behavior standpoint at this point in time?
Yes. So I think we thought about this for a very long time. We have had initial, internal discussions around what the browser moment, we call it the browser moment for the Bitcoin, would be. And I think we are nearing that moment. So I think I read few days ago about Samsung working with Coinbase to bring the Bitcoin and crypto wallets natively into the Android, onto the Samsung phones. And that would be pretty huge, because all of a sudden they will probably start rolling this out in the US first for, let's say, a few, like tens of millions of users. But eventually you can see how they can roll this out across the globe. And keep in mind that Samsung devices, they are used probably by billions of people around the world. And once you have that possibility where you can just open the Samsung device, in this case Samsung, you can open the device and you can see the Bitcoin wallet embedded natively there, that would be like a browser moment and like a key milestone for the adoption, because all of a sudden all of those people could start using it. It would really sit at their fingertips. And this is also something that we've heard, like Michael Saylor was talking a lot about this, right? What would be like, for example, the update of the iPhone and Apple pushing the native wallet onto the iPhones. That's probably gonna happen as well at some point in time. Right now, we see some sprouts that this may happen or will soon happen on Android devices. And that will be absolutely huge, because guess what? I mean, we're using those devices daily, and so are billions of people. So all of a sudden, bringing this so close to the consumer, plugging Bitcoin into a device that he or she is using every single day, this is totally game changing. Yeah. Because you don't need to install anything. Really, I mean, this is just, you open your phone and it's there.
Yeah. I mean, and you're totally right, and it wouldn't be a big surprise to see Samsung lead the way with the Android phones. It always seems like their tech is a little better than like what Apple has, at least initially, but Apple's user interface just kind of trumps everything. So once people are having these wallets on their phone, they're seeing it every day. Even if they're not using it, I think it will validate Bitcoin to a lot of people that have been kind of keeping it at an arm's length for some time, because they'll be seeing it every day, and all of a sudden they're going to be curious and they're going to want to get involved. So I really think the phone adoption and having those wallets natively on your phones is going to be the next really, really big catalyst for Bitcoin's adoption going forward. So I'm super excited to see how all that plays out. I actually read recently they're going to be coming out with digital passports on your phone too, so I don't have to lug that thing around in fear of losing it in Cambodia, which I may have done one time. So yeah, very exciting times for that, and I appreciate your insights on that, Piotr. And we got more to talk about, so hang 10, my buddy. We're going to be back at the end of a second, because Opendoor may soon enable home buying and selling with Bitcoin. On X, CEO Kaz Nejashin replied to a user asking for the option to buy on Opendoor using Bitcoin or some other cryptos. Now, Nejashin said, we need to prioritize it. The comment signals a potential future feature while confirming Opendoor is considering a Bitcoin play. Opendoor shares have been in the spotlight amid renewed meme stock interest and backing from certain investors. The stock has climbed over 1,300% since the start of July. Early results show promise with the new program. Twice as many customers reach final cash offers, and they receive them faster. The program is expanding to all Opendoor markets, and the company's leads say this is a way for them to grow without taking on additional risk. Although this all comes as Opendoor recently announced it was going to slash the company's workforce by 85%, which could affect some more than 1,000 of their employees. We're bringing Piotr back. Piotr, buying a house with Bitcoin used to be a meme. Now it's a business model. Is this the start of a genuine real estate revolution, or is this just another PR stunt? What do you think?
Yeah, so that's very much interesting, because there were lots of joking around, you can't buy coffee with Bitcoin, it just doesn't scale, it takes so long, etc., etc. Whereas here, all of a sudden, we see all those use cases where people are buying or selling houses for Bitcoin. And actually, that's a very interesting idea, because that validates the use case and legitimizes the Bitcoin as a hard money. Because, well, right, houses are one of those investments that people are buying once in their lifetime, or maybe twice. I mean, some people may buy multiple houses, but for most people, it's like one of the biggest investments they will ever made. And buying house with Bitcoin, or then conversely selling house for Bitcoin, is a big deal. I know we've been talking about this, like price of houses is going down in terms of Bitcoin, even though it's going up in terms of USD, it's going down in Bitcoin. There are some cases where you will be able to buy or sell a house for Bitcoin, so exchange it for Bitcoin. But in what we've seen from our members, there are lots of members that are thinking a little bit differently. Instead of exchanging the hard asset, which is Bitcoin, into the house, they prefer to borrow against this Bitcoin instead of selling the Bitcoin. Right. Because if they exchange their Bitcoin into the house, then guess what? 5 years from now, 10 years from now, they will look at those trades. And I've had those conversations with some of our customers, some of our members. I've had the conversations where people were saying, look, I bought my dream house 8 years ago. I spent whatever that is, 200 BTC on that. And now I'm looking at the BTC price, and I really regret that. That was the worst financial decision ever. And those people now borrow against Bitcoin to finance those needs, because they don't want to repeat that again. Because, as I said, real estate is not really scarce. It's, we can always build more. You have those edge cases like, Miami front beach property, etc. But other than that, most of the real estate is not that really scarce, and we can always build more. We can always add more, expand the supply. Whereas in Bitcoin, we know it's perfectly scarce. You cannot make more of that, more than 21 million.
Right.
And so because of that, the perfect scarcity, an unlimited number of potential homes we could build, price of homes is crashing in terms of Bitcoin if you denominate in Bitcoin. the house that was worth 100 BTC, 5 years ago, now it's worth 12 or 10 or something like that. So it's like 10x lower. And then if you wait 5 years or 10 years, obviously none of this is financial advice, it's just a financial entertainment, but it's just like 5 years from now, 10 years from now, what the price of the house will be in Bitcoin. And if you extrapolate, I could say that it is quite likely that it will be below 1 BTC. So,
Yeah.
validating that, exchanging BTC and for houses, so buying houses with BTC or selling houses for BTC, which that direction we saw members doing all as well. Some people just sold their house 5 years ago, exchanged for BTC, and now it appreciated in value a lot. Um, yeah, so these are all great, great valid use cases. And I think on the open door, so they see the demand. They see lots of people having more and more crypto and asking them for it. That's why they are asking when they can roll this out, when they can work on this, because there is actually demand shaping from retail, but also from institutions to actually be able to do a direct exchange. And it's funny because at Xapo, we've been thinking, I mean, we've had this feature forever where you can basically spend your Bitcoin with the debit card. So it's just like as simple as turning on some toggle in the app, and all of a sudden you can start spending the Bitcoin as if it was USD, but basically you spend via debit card, but it takes from your Bitcoin balance. So you can do it too, and we've seen people buying boats or what have you, putting down payments on houses too. Although, as I said, now the perception is shifting because they want to keep the Bitcoin appreciating, and they want to borrow against Bitcoin instead of really selling it, because now more people know this trick that actually, or maybe the way that wealthy have been doing this for years, that you basically borrow against your appreciating portfolio of assets. I mean, they've been doing this against stocks, against ETFs forever. Now it's available against Bitcoin, which is even better collateral than any of those. And all of a sudden you can finance those, whether it's down payment or a full payment. I mean, we've seen at Xapo Bank, we've had those like crazy use cases where people are buying yachts or boats or houses or Miami condos and financing this with loans that are backed by Bitcoin. And guess what? They will keep
Yeah.
those loans. They will repay that later, or they will roll them over. But the Bitcoin is still theirs, and it will keep appreciating because that's the hard money. So yeah, I think that's great development to see. The demand is there, but now I can see that more and more market is thinking, like more and more people are thinking about maybe instead of selling, maybe I actually could borrow against that, and wouldn't that be a better idea? And they start calculating, and that opens some interesting thoughts for them.
It sure does. Yeah, I don't want to sell my Bitcoin and cut my upside off at the kneecaps. I'd rather borrow against it. And then, because if you buy your dream home, right, and you spend your Bitcoin, if you just kept it and waited a couple of years, you could have bought multiple dream homes with that same Bitcoin by just borrowing against it. It actually reminds me of one of those real estate shows. That guy, Ryan Serhant, who's like in Manhattan. He sells all the big properties there. And there was an episode in the 2010s where a buyer offered the client about 20, I think it was 20 or 40,000 Bitcoin to buy this like $11 million property. And the owner of the property was like, I don't want the Bitcoin. I don't want it. But I got a feeling he's now regretting that he didn't take the Bitcoin, while the other guy is like, whew, I'm so glad he didn't take my Bitcoin offer, because 20,000 Bitcoin now is worth, math, a lot more than an $11 million condo in Manhattan. So yeah, I think borrowing against it's definitely the way to go. And from your banking perspective, Piotr, what would need to happen behind the scenes in terms of regulation, infrastructure, liquidity to make buying homes with Bitcoin actually work smoothly? I feel like we're still kind of getting the rails in place for something like that.
Yeah, and that's a valid point, because you still need to, after all, in most cases, the seller of the home, in most cases, will still want to receive either USD or some form of fiat currency. So it'll need to be auto-converted anyway. But if you have a buyer if you have a seller that would accept natively Bitcoin, that's obviously better, but it's not everyone. I mean, if you don't have people that are like Bitcoiners, they don't see the value of doing this, then obviously the conversion of some sort would need to take place. So there are hurdles here that you need to do and that off-ramp, And then obviously there is this thing of financing really, because like the Bitcoin, if you, for example, borrowing against Bitcoin and financing a home with it, the problem is you want to have enough time to be able to repay that loan so that you won't get liquidated, that loan won't be closed, right? And that's why people in general have been asking for longer terms in terms of Bitcoin backed loans. So they've been asking for 1 year or even extensions of that. So they've been asking for rollovers, for extensions. So for the next year, can I keep the loan for next year or repay the interest only and then keep it for the next year? And so this is important because the house in most cases is still, even if price in US dollars is, let's say its average house in US is what 400K or something like that. So it's still, even if you're borrowing against Bitcoin to finance that, you still need to have some time to repay that effectively, right? So that's why I think that was one of the hurdles for adoption, especially in this use case. And yeah, when you are buying directly with Bitcoin, so you are sending to someone's address, I mean, this is not really recognized still as a sort of like a currency. So in most cases still needs to be like converted into US dollars or fiat currency, right? If you're creating a contract, and there is a seller and the buyer, then obviously, I don't know, maybe in some jurisdictions, I haven't researched the topic, but in most cases, I think it still would need to be sort of auto converted into fiat or through fiat. So that's one of the hurdles. But as I said,
Yeah, I
as
mean,
people now
certainly,
see
yeah.
yeah, but as I say,
Go ahead.
as people now see how what's the performance of Bitcoin and what's the performance of real estate, I mean, especially if you zoom out and you see that real estate was just a sponge that was like a vacuum cleaner that was just mopping up this excessive liquidity from the system. But it was basically like people were getting excited that, oh, the price of real estate is going 10% per year. It's guaranteed 10%. It just always goes up thing. Um,
Right.
now people know why, and especially if they've been orange pilled, they see through the system and they know that this is just money supply increase that basically accrues because there's more dollars in circulation, then those dollars accrue and end up in those different assets classes, including real estate. So it's not really
Right.
the price of your house is going up. It's just value of the dollar is going down, and you're being debased.
Right.
The fiat is being debased. And then if you compare this to Bitcoin, obviously, then the picture is changes because all of a sudden it's not only not getting more expensive, it's getting cheaper and cheaper and cheaper every year. So as I said, I expect within 5 years, that's my personal opinion, obviously, but I expect within 5 years, you'll be able to buy a home for less than one Bitcoin.
Yeah, I think you're right too. I mean, 10% used to sound good, but we're almost experiencing, I think it's around 7.5 to 10% inflation here in the United States. They're predicting just this year, and 40% since 2020. So that 10% return not looking too good. And I think there's a much better asset in play that'll get you better returns on your money. And, we both know it's Bitcoin. So I agree with you, buddy. All right, we're moving on to the next story. Piotr, hang tight. We'll be back with you in just a second because billionaire investor Tudor Jones says Bitcoin still has massive room to run. Why? Because the U.S. government apparently thinks budget deficit is just a fun word puzzle. Officials project Trump's one big beautiful bill will add $2.1 trillion to the deficit by 2029. And by 2026, America's debt to GDP ratio will hit 127%. And for the first time ever, the U.S. will pay more than $1 trillion a year in interest on that debt. So, yeah, Bitcoin's store of value story just got another season renewal. Tudor Jones says this isn't a bubble, it's a reaction. The Fed's not hiking rates, not shrinking its balance sheet, and not pretending inflation's solved anymore. That's music to the ears of every risk-on investor who knows how to spell hedge. Tudor Jones says this reminds him of the dot-com boom, except this time the Fed isn't hiking to 5.5%. He's calling for a massive rally, potentially more explosive than we saw back in 1999. Bringing Piotr back. Piotr, Paul Tudor Jones says Bitcoin's about to go parabolic. Do you see the same setup here, or is this just another billionaire with a microphone in a long position? What do you think about what Paul had to say?
Yeah, so that's very interesting. So I think obviously he sees the money expansion, the M2, how M2 is increasing. He sees what's happening in the price of gold, right? The gold that is reaching almost $4,000. A crazy explosion in price. You know, some people say it's all China buying. Some people say it's other countries, sovereign states. Everybody's buying gold. Everybody is looking for an exit from a fiat debasement and from excessive money printing. And the core problem is obviously, and has been for many years already acknowledged, which is, you know, those increasing deficits. What you mentioned, if you have like $1 trillion of interest to service the ever-increasing ballooning debt, then at some point it becomes unsustainable. And the sooner you see this, the earlier you can act, right? And then how do you act? Well, the answer is simple. You need to scramble. There is scramble for hard assets, for anything that cannot be easily produced, but can hold the value. And obviously, hard assets, historically, the bearer assets, gold is a king. That's why you see this explosion of the price of gold. But here's what comes to Bitcoin. And what many people are interested in is like, okay, we see the explosion in stocks. We see explosion in gold price. The real estate is also holding up. What we don't see is really this explosion in BTC price just yet. Because, and people are asking questions, right? Why is that thing? Because they see at the M2, the gold price, etc. And there is this feeling in the market that we have some kind of a lag. So maybe Bitcoin is consolidating a bit right now, because Bitcoin is always the least predictable. When it shoots up, when it rips, then it rips really hard. And I think that's the play. So I think his assessment of the situation is more or less accurate. And that has been a conversation for a long time now, at least for a few months now, because it seems like if you compare where we were where we are today versus where we were like 1 year ago, we're not that much higher, right? Whereas lots of things happens in the meantime, like strategic Bitcoin reserve and pro-crypto administration in the US and Genius Act and ETFs and capital inflows and retail adoption and all those stories that we just discussed, right? That's happening. So you feel you get the sense that Bitcoin may be lagging a bit, but I think my personal opinion will catch up. And when that happens, we'll see quite a sudden and brutal move. What they call the price discovery. So let's see. Those following months will be very, very interesting.
Yeah, it certainly seems like Bitcoin's kind of going on that gradually and then suddenly thesis we've seen a couple of times before. And, that's what people do say, is that Bitcoin seemingly lags behind gold by a couple of months. And, this year has been fundamentally very different than all of the years we've seen past. We have all this institutional money. We have, the United States talking about stacking Bitcoin. So to me, it kind of feels like we have this new kind of stronger foundation. So I think Bitcoin going forward is going to act kind of like gold. It's going to be kind of a slow climb up and to the right, but just a little faster than gold because it is a finite amount. When you can mine more gold, or one of those meteors fly by and we do the Armageddon thing and then send coal miners out there and get all the gold. So yeah, I think you're right. I think it's just an entirely different era we're in right now, but I think Q4 is setting up to be pretty fun for all of us orange coiners out there, but we'll see how it plays out. But I'm excited. Now, Tudor Jones in this story, Piotr, blames the US's fiscal irresponsibility for Bitcoin's next likely big move up. Do you think that debt and deficits are now Bitcoin's best marketing team? Because it's kind of feeling like that.
Yes, and at the very beginning, when Bitcoin was created, when Satoshi Nakamoto created Bitcoin, it was created because it coincided with great financial crisis, right? And especially what happened after some of those, Lehman Brothers and others went bust, and when we basically took the taxpayers' money and we bailed out the whole system with the taxpayers' money, and we increased the money supply as a result, and there was an inflation created in the system, etc. And that was like a protest or like a protection against that, against those bailouts and the central bank intervention. So that was why and when the Bitcoin was created, the circumstances. Now, if you look at the deficits, yes, they are becoming unsustainable. The question is, how many years more that situation could continue, whether this sort of like a big, like the sort some kind of a collapse or some kind of a big event is pretty imminent, or is it like a long-term play, like 5 to 10 years out? But I don't think there is a
Right.
question that this is not simply a sustainable long term, because you cannot, that deficit itself is basically the obligation that needs to be repaid at some point in the future. And if you keep rolling over the debt over and over and over, at some point you need to store, there is a due date, right? And at some point you need to repay.
Right.
The problem with the US government and central bank policy is that, as a sovereign nation, you can always print more of your own currency because you own it, right? But the problem with that
Right.
is that you debase everybody else in the process when you're doing this. So I think that's Bitcoin is is the answer to that. And because the more the money supply is increased, the more of those dollars will accrue on the value of Bitcoin. And once you figure that out, it really like orange pills you totally, and there is no going back. Because once you start seeing this, then there is no going back. You cannot unsee this, right? Once you see how the system is working.
Right.
And gold historically, so for example, Ray Dalio is saying that we are in he compares our current period to the 1970s decade, and he says that like it was
Right.
also like a very inflationary period, and it was the price of gold was exploding, etc. And he says that we are living through that similar period to those 1970s. And in those cases, there is a scramble for hard assets. You need to look at hard assets. And the hardest asset that we currently know is obviously Bitcoin. Now, obviously, it's not only that, because you still have gold, which is relatively scarce and bearer asset.
Yeah.
You have other stuff like prime property, etc. But Bitcoin is in its own league, of course, here. And
Yeah.
yeah, this is the sign of the times. Also, if you look at like asset managers and hedge funds and portfolio managers and their recommendations, at the very beginning was like, do not touch crypto at all. Now we can see, you can sort of put 1% into it. Then they sort of warm up to the idea that maybe 2 to 4% is good. At some point, I don't know, I read somewhere it's like 5 to 10% is all of a sudden not bad
Yeah.
idea. And at some point we'll end up like people will be going, more than that, because once you figure out how the inflationary system works, where the constant increase of a money supply and the credit needs to prop up the whole system, because otherwise the system will collapse, then you see that this is inevitable. And so Bitcoin is the only off-ramp from that system, is the only exit strategy, is the only, debasement, immune to debasement technology.
Right. Yeah, I mean, Bitcoin certainly has the features of an apex asset. We're seeing that, like to your point. I remember back in the day, a couple of years ago, even you saw financial advisors saying 1 to 2% Bitcoin. Then it came 4 to 5, and then I'm even seeing some that are saying 15 plus. So yeah, it's really fun to see how that's changing as people do the research and see the way that the markets are moving right now and the currency is being debased, and Bitcoin's there to pick up the slack. But not everybody seems totally convinced right now, Piotr, and I'm going to talk about that in our next story, so staying tuned here for a second, because Morgan Stanley's wealth unit is telling their clients that crypto belongs in the speculative corner of the sandbox. Up to 2% for the cautious kids, up to 4% if you like a little speed. They prefer clients get exposure through ETFs and ETPs, not by playing amateur hardware wallet locksmith on a Saturday night. It keeps custody pretty simple, it keeps reporting even cleaner, and it keeps your advisor from pretending they know how seed phrases actually work. They say that crypto is not for people who need steady checks to pay the bills. It's for people who can watch their net worth do parkour and still sleep at night. Reactions are a little mixed here in the peanut gallery. Some love the clarity, while some others say the usual regulation, volatility, long-term risk, etc., are something to, keep in mind. But when a mega bank hands out concrete percentages, advisors everywhere suddenly discover a spine. And the guidance is consistent. Crypto stays a niche slice for now, sized to your stomach, not to your timeline to get that Lambo. Bottom line here from the bank is if you can't tolerate big swings or the possibility of losing the whole slice, don't order from this part of the menu. Meanwhile, industry folks call it huge because Morgan Stanley guides 16,000 advisors and about $2 trillion in assets. Set the dial to 4% and suddenly a lot of dials are going to be moving. All right, we're bringing Piotr back. Piotr, Morgan Stanley says 2 to 4% in crypto. What's your reaction as someone who operates at a Bitcoin first bank? Is that too conservative or is that about right for the average investor? What do you think?
Yeah, so Morgan Stanley is obviously an institution with trillions of under management, and historical wisdom, traditional wisdom was 60-40, right? So 60% in bonds, 40% in stocks. Most portfolios are optimized that way. Then you simply, because they have so a diverse base of customers, and most of those customers have not been really orange pill. They haven't developed a conviction around Bitcoin and haven't developed their investment thesis yet around Bitcoin. That's why they're looking at this Bitcoin thing, which is growing and it's seemingly unstoppable. And they think that they need to have a look at this, and maybe they will double a little bit into it. That's why they're saying 2 to 4%. They want to be cautious with that thing because that's like still crypto in their mind, and crypto is risky because of the perception, the way that we have had it in the history where you had a lot of, projects in crypto, coins in crypto created that went bust, disappeared, or were outright scams. That's why the whole crypto industry and Bitcoin is suffering a little bit because of that. But they've seen that even adding 1% or 2% or 4%, whatever that is, a little bit of Bitcoin, sprinkling a little bit of Bitcoin on that portfolio is actually strengthening that portfolio, and the returns are improving because Bitcoin is a wild horse and it's actually generating most of those returns. So on average, that portfolio will outperform the portfolio without the Bitcoin. But what they don't know is that they don't need to limit themselves to 4%. They can go more than that. But there is a caveat. You need to study Bitcoin. You need to know about the 4-year cycles. You need to know about history. You need to know what problem Bitcoin solves, why it was created, what's the history, and what's the likely path, and why are you holding it.
Right.
Only then they will be able to develop the conviction so that it will enable them to sort of increase those percentages to higher numbers. So because if you have a portfolio manager or you have any investor without any developed conviction around Bitcoin, they just treat it as a kind of like a novelty. So they plug it like 1%, 2% just in case, right? But they are not ready to stomach the volatility that comes with it, because we know that Bitcoin can shoot up, but it can also go down. Maybe not 90%, but it can still go down from the top, whatever that is, 60%, 70%, the drawdown. And it happened in the past, it will happen in the future. That's part of the volatility, is the energy of innovation, and that's part of the adoption cycle. So I think those percentages right now are pretty conservative. Even with those conservative percentages, they will still need to rebalance, because Bitcoin will be outperforming as time goes by everything else. So they will need to rebalance anyway. But at some point, some of those people will say, look, I only got 1%, 2% of Bitcoin my portfolio. This basically outperformed anything else I held. I need to study this thing. And the moment they start studying this thing, they will get orange pilled, and then they will go more into Bitcoin. So that's my that's sort of how I see it now.
Yeah, absolutely. I mean, Bitcoin is the new hurdle rate, right? And it is unfortunate that we have all these a million other cryptocurrencies, and people kind of conflate Bitcoin as being part of that, when we know there's Bitcoin and then there's everything else. So, as people do their research, they discover that, and then they reap the rewards, as you and I have seen time and again for years now. And I think it's only a matter of time, until everybody's on that train. But as Michael Saylor says, you buy Bitcoin at the price you deserve. So we'll see how it plays out for them. All right, Piotr, always a pleasure for having you on the show today. Before we let you go, though, there's always, I'm sure, plenty of people in our audience that are interested in you and what you and the team at Xapo Bank are doing. What's the best place I can send them to get more info?
Yeah, go straight to the xapobank.com. You can learn about our app, but also the latest products we've launched and some very exciting updates we have coming. So stay tuned.
Amazing. Well, thanks, Piotr, and enjoy the rest of your week, buddy. Can't wait to have you back on the show real soon.
Thanks, Hank.
Cheers. All right, gang, we're taking a quick break here at the Blockchain Report, but when we're back, we're going to do some chart talk with our crypto wunderkind, and we got a special guest joining us today to talk shop, so stay tuned. More Blockchain Report coming your way right after this quick break.